The high energy consumption of cryptocurrency has a huge environmental impact. China is the world's largest Bitcoin miner, and a large number of mining facilities are located in Xinjiang, a region notorious for the persecution of Uyghurs. Iran is using cryptocurrency to bypass international sanctions. Hello, welcome to Lei's Real Talk. I'm Lei. From September last year, the price of Bitcoin has soared from under $10,000 to $58,000, an increase of nearly 5 times. The rise in Bitcoin price also skyrocketed the price of other cryptocurrencies. Ethereum has risen from $300 to more than $2,100, an increase of 7 times. Supported by investors like Elon Musk, the virtual currency market has been on a record bull run. But several major risks are looming with uncertainties. First, cryptocurrency is a business that consumes a lot of energy. The current energy consumption of Bitcoin mining worldwide has reached 129 terawatt hours per year, which is more than the total electricity used in countries like Norway or Ireland. It will rank number 28 as an independent country in the ranking of global power consumption in 2021. By the way, 1 terawatt hour is 1 billion kilowatt hours of electricity. Cryptocurrencies are digital assets that are a medium of exchange between two parties without involving a government or a central bank. Its anonymous, decentralized nature makes it difficult to control. China bans cryptocurrency trading and blocks access to all domestic and foreign exchanges. But China allows crypto mining and is the world's largest mining country due to its supplies of cheap energy and the accessibility of mining machine manufacturers. China at one point accounted for more than 75% of the total global Bitcoin mining activities. This number fell to 65% in 2020, according to the Cambridge Bitcoin Electricity Consumption Index. The United States, which has only 7% of the global mining activities, ranked second. There are 2 ways you can get a Bitcoin. It can be bought or mined. Bitcoin mining is the process of discovering or getting new Bitcoin by solving a complex computational puzzle through high-powered computers. Miners compete with everyone on a peer-to-peer network to earn Bitcoins. The miner who solved the puzzle first is rewarded with Bitcoin. 36% of Chinese mines are located in Xinjiang, where more than 1 million Uyghur Muslims are imprisoned in concentration camps. That means 20% of the world's Bitcoin comes from a region notorious for human rights abuse. Why are they concentrated in Xinjiang? Because the cost of energy there is cheap. Xinjiang has an abundant supply of coal. The region's remoteness and cheap coal mean cheap energy to power the machines that mine Bitcoin. Over the past months, scores of multinational companies have stopped sourcing materials and products, such as cotton and tomatoes, from Xinjiang in support of Uyghurs' human rights. Barron's columnist Isaac Stonefish warned in a February article of the ethical and regulatory risks of Bitcoin because of the atrocities in Xinjiang. Another risk is Bitcoin's environmental impact. About 30% of China's mining machines are powered by coal energy. A recent study conducted by the Chinese Academy of Sciences and Tsinghua University found that the annual energy consumption of Bitcoin mining in China is expected to peak in 2024 to 297 terawatt hours and will generate 1,300 million tons of carbon emissions. It's equivalent to the annual greenhouse gas emissions of Italy or Saudi Arabia. The enormous demand for electricity and the consequent high levels of carbon emissions may undermine global efforts to fight climate change. Another problem that Bitcoin mining contributes to is the current global shortage of computer chips. When Bitcoin was first created in 2009, there were 21 million Bitcoins to be mined or discovered. At the time, one could mine Bitcoin on an average computer. But by design, the more Bitcoin that's mined, the more complex the mining algorithms become. Mining now requires special computers that can handle intense processing power. There are about 1 million Bitcoin miners in the world who use powerful computers to solve extremely complex computational math problems. Bitcoin mining machines require the same computer chips that are used for phones and vehicles. This has exacerbated worldwide chip shortage. According to economist Alex de Reeves, to produce 1 million units of the most powerful mining device, roughly half of the world's production of 7-nanometer chips will be needed for an entire month, and this probably won't ease up until 2023. Since the algorithms are getting ever more complex, a lot of Bitcoin mining is now done by professional mining farms, which are essentially companies with giant server rooms filled with machines that require highly specialized chips. If the prices of these chips go up, the cost of mining operations goes up. To control cost, Chinese miners have moved their farms to wherever energy is the cheapest. Guess where have the Chinese moved their farms to? Iran. Yes, Iran's energy cost is 80% lower than that of China. It is said that Iran now has 24 officially registered mining farms, consuming about 450 megawatts of electricity a day. That is equivalent to the energy consumption of a city with a population of more than 120,000. Since January, there has been a number of power outages in Iran, and it was reported that they were caused by Bitcoin mining farms. Meanwhile, authorities in Iran have seized tens of thousands of mining machines they claim to be illegal. Iranian media reports and officials began to point the finger at a large Chinese mining farm near the city of Xinjiang. The farm, which employs 54,000 miners, is the largest authorized site for Bitcoin mining in Iran, reportedly using 175 megawatt hours of electricity a day. Hit hard by international sanctions, Iran sees mining cryptocurrency as a source of income for the state. Since last year, Iran has opened new opportunities for foreign mining firms. The anonymous, decentralized nature of Bitcoin would allow countries like Iran to bypass economic sanctions by repurposing sanctioned oil into fuel for Bitcoin mining. And China has quietly kept their presence in Iran a secret. From the U.S. government's perspective, Bitcoin's spillover risks now include international security concerns. Here are two videos I recommend. One tells the untold stories of China's chip industry, and the other analyzes H&M and Nike's struggle in China over Xinjiang cotton. Thank you for watching, and I'll see you next time.